April 15th, right around the corner. And if you're like me, I want to pay less in taxes. So today, you can still do a few things to reduce your tax burden for 2025. I've got 5 things that you should consider for your taxes and for your financial future. Right out of the gate, idea number 1, let's make a contribution to our regular or Roth IRA before April 15th. You still have time. $7,000 for those under 50 years old, $8,000 for those 50 and older. Make sure you check with your tax preparer CPA. There are income limits for both, but that's a certain way to reduce your taxes or put money into the Roth account for future wealth accumulation. Okay, idea number 2, similar to idea number 1, if you are an independent contractor or small business and you have not made your profit sharing contribution for 2025, you still have time. Remember, profit sharing contributions for solo 401ks can be up to 25% of your W-2. Pension and other profit sharing contributions, reach out to your actuary for the maximum amount. But remember, those deposits must be made before you actually file your business tax return. So check with your CPA before making those contributions. But that's a big way to have a large reduction in your tax liability for 2025. Okay, we're still reducing tax liability. Idea number 3, HSA plans. If you have a high deductible health insurance plan for last year and you haven't made those contributions that you can make, let's make them before April 15th. Limits vary. The individual limit for last year, $4,300. The family limit, $8,550. And of course, if you're over 55, that $1,000 extra catch-up that you can use to reduce your tax liability. Now, the funds within the HSA can either be used to pay for current health costs, or the money can still stay in the account and it can grow over time, and you can use those monies in the future to reduce health costs when you actually retire. Okay, idea number 4 for you, the home office deduction. Now, remember, if you're claiming a home office deduction, 2 things that you must have in order to qualify. Number 1 is the space in your home needs to be used exclusively for business. Number 2 is the space that you have is your principal place of business. So you can't have an office somewhere else and still deduct costs for home office deduction. The rules can be tricky, so make sure you reach out to your CPA. Number 5 on our list, not technically a deduction, but something that you certainly should know for this year's tax filing. If you want to extend your tax return, number 1 is, remember, you have to pay all of your tax that is actually owed by April 15th. The extension does not give you an extension to pay your liability. It's only an extension to file the return. And related to filing an extension, remember, if you want to, you can combine your first quarter estimate with your extension payment, add those 2 together, and use it for your extension payment. Any overpayment from 2025 can be used to be rolled over for a 2026 estimated tax payment. So you kind of get 2 balls with only 1 pitch. Have questions? Reach out to us by clicking the link below for a no-charge 15-minute introductory conversation about your taxes and your financial future.